Hey everybody, hi, good morning. Hey, this is me, Darius Anucauskas from Easy Markets, and I hope you're having a wonderful start of Friday. Look, today is the last trading day for this week, so yes, let's see what happened this week in general, what kind of data we had, how it affected the markets. We had some interesting, exciting things happening yesterday, so we'll dig into all that as well. So yes, stay tuned. Hopefully you'll enjoy the session, and I'll see you in a bit. Okay, hello and good morning, everybody. Hi, this is me, Darius Anucauskas from Easy Markets, and today is the 12th of July, 2024. So, yeah, welcome everyone. Welcome to this Friday's morning session, where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. Basically, yes, the usual things. Now, we have a busy, we had a busy week, I would say. So let's dig into all the information that we have received this week, and we'll look at of course how the market did react. So ladies and gentlemen, before we go any further, as always, I need to quickly have a read through our risk disclaimer. So yep, the content we produce does not constitute investment advice or investment recommendations and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. Let me just finish off a few things here and there, and I'll be back with you right now. All right, okay, so also just a quick mentioning of our Easy Markets website, which you can always check out for more information about us. Ooh, let me adjust this one again because I think that, yes, let me adjust this again here very quickly because last time I didn't adjust it. And also every time when I'm working from home, by the way, as you can see, I'm working from home today again. So yes, every time I kind of forgetting to adjust this into the screen so that it would be nice and dandy. But hey, look. Right, now then, so yes, check us out. Honestly, I think that you'll find some useful information. We also have the new Easy Markets AI tool. So yes, all good. We're also on the right track. Look, anyway, you know what? I really want to get into the markets for now. I think that there's a lot to talk about. So the first one I want to pick up here is Nikkei 225. And what happened here? We had a strong decline. So if you watched my session yesterday, you'll remember me saying that look, we had a new all-time high created. We hit that 42,000 and a half zone as well. So everything was kind of moving and shifting, towards the upside. What I said to you that basically as long as we continue to trade above that 41,000 zone, I'm going to continue targeting the upside. Today, or should I say yesterday, in the futures, reversed sharply to the downside. And we came back to that 41,000 zone. So looking at my chart here, what I'll say is that we're near this 41,000 zone, and let's see if we can clear it and we can drop below it. On the main index, the cash index, let's have a look at this one. There we go, drifted back towards that 41,000 as well, and we are near critical spot, because the question is if this can drop and stay below this 41,000 zone, well, basically we could see some nice corrections back down. Of course, we're not rushing into things yet. This decline is coming from of course, let's start off from the fact that yesterday we had some selling in the in the tech world in the US, and kind of it followed suit here in Nikkei. But the fact is that I think that there was a possible intervention from the BoJ, and that's what everybody's talking right now about. Yep, could be the case. I mean, if they're gonna start pushing, towards increasing rates because they have to in order to control their Japanese yen, then of course that could play out negatively for the Japanese stock market. Again, we'll see how it goes. For now, I'm watching this carefully. I mean, I'm looking at the technical picture, and I do love that 41,000 zone because that so far is providing good support. And if that gets cleared, well, more sellers could join in. Let's jump into China 50. China 50, there we go, pushing higher. This one doesn't care. I mean, this one is just living its own life. I mean, and to be honest, that's okay because that's great. It's really nice to see when there are instruments which, although should be related to each other, still move in different directions, because then at least you can maybe, I don't know, like okay, from the trader's perspective, it's a little bit more interesting, but unless you're always, following just one and just jumping into one and that's it. But look, long story short, for now, China 50 is pushing higher, and it climbed above my downside line. I talked about it this week. I said to you that if we do push and stay above it, and yesterday we pushed and stayed above it, my next targets are the EMAs here, the 45, the 100, and the 200-day EMAs, and then we'll go from there. So yes, that's kind of my game plan. Let's see how this is going to play out, of course, but for now, everything seems to be looking quite positive. In terms of economic data from China, look, this morning we got the balance of trade, and basically that's something that probably is driving the index here higher, because again, if all other indices are reversing nicely to the downside, this one is pushing higher. Yep, exports did improve and imports did decline. So basically a very nice balance of trade here showing up. Of course, it would be a little bit difficult to beat that next time. Okay, but probably we'll go step by step. We'll leave this for next time. But at the moment, looking at this picture, yes, China presented a very nice balance of trade. Yep, let's see if this positivity can remain like this, even if we see, let's say, declines in the broader market. ASX 200, let's have a look at this one. Beautiful push. I think that this is also reacting nicely to the Chinese news. You know what? Because look, the two economies are very connected, and if China is doing well, Australia seems to be doing well as well. Again, it's a maybe very broad and like maybe how to say it. A lot of people will not agree with the statement. However, look, you're always, your biggest trades are always with your closest neighbors, right? So in this case, ASX 200, yes, there we go. Beautiful moves to the upside. Another thing to say is that, look, in the beginning of this week, I talked about this. I said to keep your eyes on this little barrier here, this 7,830 zone. I said that if we're gonna clear that one, I'm gonna get a little bit more excited with the upside, and we could go further north here, potentially targeting this downside line and this 7,886 territory, which I've mentioned yesterday. I said that if that's gonna get cleared, fantastic, more buyers could join in. There we go. So far, so good. We're on the right track to aim for the 7,971 zone right here. Let's see what's going to happen next. In terms of economic data from Australia, now let me just probably instead of this, I'll put just Australia just to see what happened, what we had this week, and if there was anything. The only probably interesting piece of information was on Tuesday when we got the Westpac consumer confidence numbers, and on Thursday yesterday consumer inflation expectations, which came out lower, kind of in line with what's happening in the US basically. So long story short, for now I think that yes, ASX 200 is enjoying the moment. The only thing is that you have to be very careful, and this is where somebody might say that, hey, there's maybe a bit of a confusion on what the RBA wants and what we're seeing actually on the charts. Now, I'll jump into AUD USD later on, but basically I just wanted to show you that we had a good rally this week in Australian dollar, and kind of ASX 200 was also pushing nicely to the upside. So the question is like, why? I mean, like, why is this happening now? I think that the ASX 200 was pushing higher just basically like purely on the fact that there was some good news coming out in general in the world, apart from yesterday's sell-off in the U.S. stock market, or ish sell-off ish. But the fact is that the RBA is thinking of possibly increasing rates. That, of course, should be negative for the ASX 200, for the Australian stock market. However, not yet. However, it's just a thought. It's just an idea. It's just something that RBA might consider. So why to kind of jump into the panic mode right now when you can just still push higher a little bit? So that's why I'm saying. That's what I'm saying. So of course, ASX 200. Sorry, Australian dollar was also pushing nicely to the upside based on that news. But again, it will balance itself out. Don't get me wrong. It will eventually balance itself out. I mean, you do get these situations in the market. That's pretty normal. However, again, eventually they do correct themselves back down. So we'll see which ones we're going to correct back down. Will it be the Australian dollar or will it be the ASX 200? Kind of look. Australian dollar is a commodity linked currency, and in a way it's kind of a risk. You measure kind of risk, with it, and how risk is how risk looks. Is it risk on, risk off environment? And if suddenly indices start selling off, we could see Australian dollar also drifting nicely to the downside. So that's why maybe this, connection here with indices falling and then Australian dollar also falling, then that could be logical just because Australian dollar is seen as a more risky currency. Look, Dow Jones Industrial Average. Dow Jones Industrial Average, it's pushing nicely to the upside. Yesterday Dow was the better performer. Of course, it remained in positive territory. However, Nasdaq was a disaster, but I'll get to that in a bit. So Dow managed to remain in positive territory, and look at this. I said to you, and I'll probably stick to my, oh, actually, no, I'm not going to say probably. I'm going to stick to my words, because what I said to you before, that I will continue targeting the upside. I will aim higher just because the S&P and the Nasdaq did the all-time highs. It's time for Dow Jones to do the all-time high as well. Last time we had the same story. Dow and the S&P did Dow and Nasdaq did the all-time highs. It was, time for S&P to catch up. It did also that. It created a new all-time high. Now let's see if the Dow can do that. It doesn't have to go too far. I mean, look, it's just around here. This is I'm looking at, by the way, I'm looking at the futures, the 40,358 zone here, and that has been reached back in March of 2024. If we can clear that, and we are not far from that, to do 350 points for Dow, come on, it's not a problem. So that's what I'm saying. Excuse me. That's what I'm saying. For now, I'm looking at this picture here, and I'm leaning towards the upside. As long as we continue to trade above that 40,000 zone and this little downside line taken from the high of the 31st of March. The S&P 500. The S&P 500. Fantastic. Fantastic. What did I tell you? What did I tell you in the beginning of this week? My next target is the 5,700 and 712 area. Boom. Why was I aiming for this area? The 61.8% here on the Fibonacci extension. And that extension is drawn from the lowest point of October of 2023 to the highest point of March of 2024, and then to the lowest point of April of 2024. Fantastic result here, honestly. I cannot stress this enough, how happy I am here. And basically, yes, great. We've had a beautiful new all-time high, exactly tested that area, and there we go. We're now drifting back to the downside. The question is, can this drift lower be sustained? Because at the moment, I think that for me, the drop back below the 5,581 zone here would be required from the technical perspective. But let's not forget, right now, all eyes are on the Fed, because yesterday Let me just put this back here. Let's click on US. Let's remove Australia from here. So yesterday, basically, we had the inflation number coming out from the US, the initial and continuous jobless claims as well, for sure. Initial jobless claims dropped. Continuing jobless claims dropped as well. Inflation dropped as well. So inflation fell to 3% here on the headline year-on-year figure fell from previous 3.3 to 3%. The forecast was for a 3.1, so basically we came out lower. Core inflation also came out lower. Everything is kind of, everything, all these numbers came out lower, and in a way, the market sold off. The market sold off. I think that now everybody's worried what's going to happen. So I think, to be honest, I don't think that this was this like bad reaction to the inflation number. I think it was just some profit taking from the table, because if the Fed is expected to not do anything this month, but then do something, or should I say, cut a rate next month. Now, this is where the tricky moment comes in. So maybe the market will pick up in September again, and push higher. However, I think it's just a natural profit-taking moment right now. I mean, look, we had some good rallies here, and we created some new all-time highs. We hit some key areas of resistance, and looking at S&P here, I mean, everything's kind of logical. You're doing a bit of profit taking. The market thinks that if inflation comes out lower, then basically we could see if inflation comes out lower, then we could see the market rallying, because then the Fed could go and cut rates, which is true. It's logical, and we did that rally, and we did see that rally. However, now then then everybody's like thinking, wait, how much more can we go higher? Maybe a bit of a retracement could be possible. Maybe it's if we are expecting to see another rate cut, then why not to rally later on? Do a little bit of a retracement and then make a rally, and again. So that's what I'm saying. So you cannot really go and continue rallying like this. You need a healthy correction. Let's see how healthy this will be. How big of a correction will this be? But look, I will say it this way: on the S&P 500, if I'm looking at some higher levels, then certainly I am waiting for a pop above this barrier right here. No, there we go. This territory right there. If we can get a nice clearance of this, wonderful. I will this 5,712 zone. If we can get a nice clearance of that, yes, a forthcoming higher high will be confirmed. For the downside, a drop below the 5,581 zone right here is needed in order to go lower. And pretty much that's it. Yesterday, by the way, I wanted to pick up quickly on PepsiCo. We got some earnings. Let me just double check. Ooh, what a reverse. Beautiful earnings from revenue surprise. Right, okay. Earnings came out good. We saw initially declining, the stock decline. And look, it kind of worked and did not, I would say, because what I was saying here this whole week, I said to that even on Tuesday when me and Jens, my guest speaker, we talked about this idea where we could see a drop below this 161.8 zone, and this could open the door to some lower levels, and it did initially. But I was kind of aiming for this 156-ish zone. Look, we came closer to that, but then we reversed sharply and pushed back above this 161.81. So this, to me, tells that the bulls are really not giving up and trying to make it work. And the fact that they managed to climb back above this little hurdle here, this key support zone, then yes, that kind of is pointing more towards an idea of some higher levels. Let's see. Let's not rush into things. For now, of course, I will aim for some higher levels here on PepsiCo stock, but only up until these EMAs first, and then we'll go from there. NASDAQ, let's jump into that one. There we go. Beautiful. Look at this. I mean, look at this decline. This was tragic. This was just crazy. And let me just double check something here. Yeah, Nasdaq yesterday lost around 1.95%. So yes, decent 2% decline in one day. Okay. Look, for now, what can I say? I mean, I'm gonna stick to my game plan. I said to you that if we do drop back below this 100% zone here, this 20,630 area, I will consider a move lower. There we go. So far we're on the right track. 20,305 is my next target, and then the upside line is taken from the low of the 14th of June. So that's what I'm going to aim for, and then yes, and then we will go from there. Look, for now, I mean, the next target after that, if we do break this upside line, yes, of course, we can consider something. But at this point, just let's aim for, maybe we'll leave it for next week as well, just to be a little bit more on the safe side. But for now, just aiming for this 20,300 zone or this upside line, and then we'll go from there. The German index DAX, let's jump into Europe a little bit here, and Europe was actually doing quite well. Europe was doing quite well. We're pushing back up here, but I said to you before, and I'll say it again, that for me at this point, I would like to see a push above the 18,818 zone here in order to go higher. Period. That's it. That's what I'm going to do. In terms of European data this week, let me just jump into that. Oh, let me just remove US. So yes, nothing major, as you can see here. By the way, next week we could see a bit more action here. We're going to get on Monday, we're going to get industrial production numbers, as you can see here. Balance of trade balance coming out with the economic sentiment, ZEV economic sentiment on Tuesday, Wednesday, CPI final number coming out as well. From the Eurozone Thursday, interest rate decision. I mean, wait for next week. Honestly, if you're thinking to examine this one and you're thinking to do something with it, I would say leave it. Just keep on monitoring this barrier. If we can get a nice clearance of that and we stay above it, there is a greater chance for this one to move higher. However, of course, don't get me wrong. Anything you have to take everything with a pinch of salt, but in a way, this could be, like I said, that nice gateway towards the upper side of the rising channel where we're still currently sitting in. It seems like so to be so. But hey, I mean, good potential target. Let's see what's going to happen here with this hurdle first. Let me just highlight it for our future reference. This is what I'm going to do here. And yep, this is what I'm going to be keeping a close eye on today, but mainly next week. By the way, just to let you know that next week on Monday, we're not going to have a session. I'm going to jump in on Tuesday. So just to let you know, so that you wouldn't tune in. But you can look. Check the our YouTube channel. Click subscribe. Honestly, notify the little bell there. It'll be easier this way. But yeah. So coming back to the downside scenario on the German DAX, or actually not even coming back to, but examining now. Examining the downside scenario. Look, for me, I think that maybe the better option here would be to see a break below this short-term tentative upside line. Again, I don't want to rush into things, but I'm going to take a bit of a careful approach here, and if we do get a nice clearance of this upside line, then yes, I'll consider a bit of a move to the downside. Jumping into the FTSE 100, pushing higher, but again, the question is, can this upper side of the descending triangle, can this surrender? At the moment, it's a tricky one because in general, this is a bearish indication, in general, according to all the TA rules. Such patterns tend to break lower. However, I've seen this happening breaking out in the opposite direction several times. So that's why I do not wish to rush into this in terms of, let's say, looking at some lower levels. I don't want to rush into this. I rather wait for a break of this downside line first and then kind of aim higher. If I can get that, yes, I will get a little bit more excited with the upside. For the downside, a drop below this 8,151 zone here is required in order to go lower. Let me just jump into very quickly into UK data because I just wanted to double check. We had GDP numbers this week. Yes, so we had the GDP figure, and the month-on-month came out at much better rates, plus 0.4 against the forecast is plus 0.2, and then against the previous 0 basically. So yeah, good result. The same story on the year-on-year figure as well. So in general, maybe that's kind of helping to fuel this this push higher here. And in general, I think that the stock market is still fighting. We can see by the Dow. The Nasdaq, of course, is taking profits, but that's okay. That's logical. But the FTSE 100 is looking quite positive in a way. Let's see. Let's see if Mr. Keir, the new Prime Minister, can boost or somehow stimulate this. It's at the moment maybe the market is actually seeing him as a good candidate, and maybe that's why there is a little bit of a boost in the FTSE 100 because maybe this is something that. From where the market can get more hope. The British market I'm talking about. So yeah, let's see how this is going to play out, of course. US dollar index yesterday, lower CPI numbers did not sparkle very well here with the traders, with the bulls, and there we go. We saw a major decline, which is fine. Look, I talked about this. I said to you that if we do drop and stay below the 104.41, 47 area, somewhere around here, I will go lower. And there we go. My next target was the 103.96 tick. Can I say this played out very well, and we actually had a good hold up here. This is a good area that I'm going to continue monitoring, and for now I will continue targeting the downside, to be honest, as long as we stay below the 200-day EMA. However, I have to admit I am cautiously bearish because this is quite a strong area of support. This one right here, I don't want to ignore it, and if it kind of continues to hold, maybe a bit of a rebound here could be possible, but at the moment I'm leaning again towards the downside. Just bear with me one moment. There we go, and now my throat is good to go. So let's jump into the commodity world. Fantastic. 2,400 tick. I've reached my target. I talked about this from the beginning of this week. I said to you that this is what I'm going to aim for, the 2,400 zone. But I'll get more comfortable with the upside if we do clear the 2,393 zone right here. Fantastic. Good result. Good result. What's next? Next is basically still the upside. I'm aiming for that 2,450 zone, which is the current all-time high. I want to see what's going to happen there because will we do 2,500? Again, I don't want to, like I said, I don't want to scare off the bears here, but for now it seems to be that yes, it's the direction is the one-way direction is to the upside. I would say maybe we have something around here. Let me just show you what I'm talking about. Maybe we have a rising channel formation here. Again, could be a nice idea. Let's see if that's going to be the case. So basically this idea would work out if we can, first of all, continue to trade above the 2,400 zone. That's first. Then we aim for that 2,450 and then we clear it, and then let's say if it wants to go a little bit more to the upside to create an all-time high, maybe this upper side of the rising channel here could play out nicely. At the moment, everything's pointing a little bit more towards the upside. Silver, let's jump into that one. Ooh, silver was interesting. Okay, now this is a bit messed up. But I like it. It's good. It's good messed up. Why I'm saying this is because look, I talked about this upside scenario this whole week, and I said to you there is a good chance this could break out higher, and it did break out higher. It did push higher. It did push towards that 31.55 zone, and now the question is, can we go further north? Well, at the moment, this 31.55 barrier is something that I'm watching carefully. If that gets cleared, I will go higher. Yep, I will go higher. And look, at the moment we're drifting back down. So in a way, there's an indication that the bears are still somewhat in control and they are still loving the game here. However, for me to get comfortable with the downside, as I said to you before, and I'll stick to my words, a drop below the psychological $30 mark would be required. Because at the same time, depending on how and when we're going to approach this, maybe this EMA, this 45-day EMA could approach this area as well. So yes, the psychological $30 mark could be the next this barrier for the downside. Again, not something that I'm saying new here, but hey, let's not give up on the bulls yet, because there is a chance for the US dollar to drift lower. And well, if the stock market starts reversing sharply to the downside, then the situation with silver here, I mean, silver could get picked up because it's a safe haven. And in general, ladies and gentlemen, look, it could be a nice rally here if we do end up traveling towards that 32.52 zone right here, which is the highest point, the current highest point of this year. That's like from here, roughly from here, it's like not a full 10% if I'm not mistaken, right? Let me just double check. So from around here somewhere, 5, sorry, apologies for that. Yes, 5.5%. That's still good. I mean, that's something that you know. But again, I'm not saying that this is exactly what's going to happen, because at the moment we're seeing a decline. So we need to see some sort of a rejection somewhere. We need to see a reversal back up. So we're not seeing that yet. It's the early hours of Friday. So we still have the full European session to go through, the U.S. session to go through. Let's see if this can reverse back up. Oil, jumping into oil, pushing back up. Yes, okay, so far so good. We're on the right track. I'm aiming for that 84.45 zone, or 84.5 area. As long as we stay above the 82.72 territory right here, I will continue targeting the upside. So my next target, as I said, is 84.5, and then we'll take it from there. If we clear it, and I'll stick to my words that if we clear this barrier right here, I will go higher towards the 87.63 area, somewhere around here, and then we'll take it from there. Let's jump into corn. I just wanted to have a look what's happening here this week, and yeah, so far so good. In the way we remain above this key area of support, which I talked about. This area is roughly between the 393-94 levels. So yeah, look, for now, I am, how to say that? I'm being cautious with this one. I like the downside scenario. The only thing is I'm being cautious because I don't want to rush into things here, because this could eventually, play out negatively, or well, negatively for the bears. Because look, if I'm bearish a little bit on this one, if it breaks the downside line, then yes, this is the scenario, and pushes above the 410 zone somewhere around here, then yes, this kind of this opens the door to some higher levels, and all my ideas of traveling lower could be evaporated. But for now, the fact that we're still below this little short-term tentative downside resistance line, we're near this key area of support. Maybe this could work out, but again, I need a confirmation break. Soybeans. This one did my confirmation break. It fell below this key area of support, this highlighted zone. So yeah, I'm going to continue targeting the downside. Maybe even could end up traveling towards that psychological 1000 zone. Let's wait and see. Let's jump into the crypto world, ladies and gentlemen. Bitcoin. Okay. So yesterday, this is where the interesting bit comes in. So yesterday we saw a good hold up here, and look, I will say this way, that so far it's working nicely, because I talked about this idea. I said to you that in order for me to go higher, I need to see a push above the 200-day EMA, above the 58,000 or 59,000 even zone, just to be a little bit more on the safe side. So we had those pushes here, but there we go. It quickly drifted back down. So what I'm looking at here is a drop back below the back below the downside line here, and if we can get that move back below the downside line, then yes, great, more sellers here could join in. So long story short, in general, at this stage, it still looks a little bit bearish for me. However, I need to see a drop below this area first, below this lower side of the falling channel, in order to get comfortable with the downside. At this point, we're kind of stuck a little bit in limbo. It's neither the bulls nor the bears who are in control right now, but it could be quite interesting at a later stage. Ethereum, good move here. Look at this, beautiful. Okay, I have to say this, and I said it before, and I'll say it again. This idea, which I mentioned about the retesting the trend line from the other side after it gets broken, so far, it's working like a charm. I would say 80% of the time it probably works, but I love it. It's a great idea. So look, we broke this upside line here, which I had taken from the low of the 3rd of January, or the lowest point of this year. We broke it, we moved lower, we found good support around here near the 2,800 zone, rebounded, pushed back up, traveled back above the psychological 3,000 zone, but then we were like thinking, hey, where can it find resistance? And it could find resistance, and it found resistance near this territory, near this upside line. So basically this worked out very well, and it's now drifting back down. The question is, can it actually go all the way down? I will, at this point, I think I'm going to get rid of this arrow, and what I'm going to do here is I'm going to take a very careful approach, as always, to be honest, nothing new. I'm going to take a very careful approach, and I'm going to wait for a push back above the this upside line in order to go higher. For the downside, a drop below the 2,800 here on the Ethereum would be required. Litecoin, let's jump into that one. There we go, pushing higher, and so far so good, but I'm still classing this as a nice temporary correction before another possible leg of buying. So, you know. Oh, sorry, another leg of selling. Another leg of selling, not leg of. So this upside scenario right now, this upside move, could be classed as a temporary correction before another possible leg of selling. Why? Because we're still below the downside line, below all the EMAs, and still this could reverse back down. If we start breaking the downside line, I will start shifting my ideas towards higher levels, but still will have to be a lot of things that will have to be kind of met, you know, in the world of my criterias. Ripple very quickly on this one, pushing nicely to the upside. Okay, we cleared the 0.45 zone. I talked about it. Okay, that's absolutely fine. We still have a chance for this one to drift back down again if we struggle to overcome this downside line together with a 45-day EMA. Okay, ladies and gentlemen, the forex world. AUD, USD. So we had, like I said, we had a good rally this week. We pushed higher, but now we're seeing a bit of a weakness. I mean, I think that this weakness is coming in because of the weakening in the US. Weakening in the U.S. indices, and in general in the stock market, that we saw a bit of a correction moment here yesterday. Then the Australian dollar being, as I already mentioned, the risk currency, it's reacting to this fall in the stock market negatively. Okay, that's absolutely fine. The U.S. dollar, of course, is not the strongest as well, but here in this case, I mean, Australian dollar right now is losing grounds. So the question is, can we go actually higher? And yesterday we did move above this 0.6781 zone. I talked about it. So once again, I'm going to keep an eye on it. If we climb above it and stay above it, I'll go higher. At this point, I'm just observing the price action. My downside scenario is from around here, actually, from this break of this upside line. I know it's a lot of territory to miss out on, but hey, I'd rather be safe than sorry. Quick update on AUD and ZD, because this week, yes, NZD was in the spotlight. If you forgot already why, well, this is why. We had the interest rate decision from the RBNZ. It came out the same as previous, 5.5, nothing major basically. And yeah, I mean, the market didn't like that, or should I say, the Australian, New Zealand dollar bulls did not like that, and we saw nice selling off here in the New Zealand dollar against its major counterparts. Australian dollar was not the exception. So yeah, look, fantastic result. I've tested my 1.11 area. I was hoping to get that, and great. We stayed above it. We continue to trade above it. So as long as we stay above that, I will continue targeting the upside. My next area of possible resistance, and this is where I need to quickly grab this. I'll just grab this line here. This is what I'm going to be aiming for. This 1.1176 could be a nice good target, and that's what I'm going to stick to for now, as long as we stay above the 1.11 area. If we can stay above that 1.11 area, yes, great. We'll continue targeting the upside. For now, of course, maybe a bit of a retracement. Somebody wishes to see a bit of retracement, but I think that from the very short-term perspective, we can do this. If we do fall back below the 1.11, a bit of a decline here could be possible towards this 1.1031 zone, and only up until here. That's what I'm going to aim for. I'm going to keep an eye, of course, on the possible on a possible upside line here, which this is here. So there we go. This upside line could be a nice good area to watch. But look, I think that this correction back down here would still be above this upside line. So that's why I'm not, I'm being very careful, because maybe this upside line could provide good support, and we could then rebound and push back up again. If this upside line gets cleared, I will go lower. AUD CAD. AUD CAD is at an interesting spot. So yesterday I said to you that I'm keeping an eye on this 0.9214. If that gets cleared, I will get more comfortable with the upside. And there we go. We got that move. However, now we're seeing a bit of a retracement, which is fine, which is okay. As long as we stay above the 0.9214 zone-ish, I will actually, you know what? Let me just double check. Yeah. 14 ish. If we stay above it, I will continue targeting the upside. If we start dropping below it, I'll take a bit of a neutral stand, because look, in general, for me, the downside scenario on this one is on a break below this upside line. NZD USD, just a quick update. A bit of a roller coaster ride here, because we are just bouncing around. Look, the 200-day EMA worked out nicely. That we have to accept. It worked out nicely. Yesterday we saw a nice push back up again, but then it drifted back down. Honestly, this is a mess. If you like trading something like this, congratulations, this is something for you. For me, I will probably what I'm going to do is most likely is the a drop below the 0.6049 zone right here would be nice. So if that gets cleared, yes, further declines are possible. For the upside, the downside line is something that I'm watching. If that gets cleared, I'm going to go towards slightly higher levels, towards the 0.6154 area, and then we'll take it from there. NZDJPY. Beautiful, amazing, and this is where I'm going to get into the Japanese yen. So apparently there are reports that there was something like a secret intervention from the BoJ in order to stay before the US CPIs, in order to not to allow this to explode, maybe, in case these CPIs come out much better, and or let's say not much better but higher, and then we could see like USDJPY, for example, exploding nicely to the upside, and this is where I think that they took some measures, and yeah, again, it's something that I think is speculation. Well, I don't know if it's official. Actually, I don't know if this is the official statement, but it seems, yeah, it's interesting. So but what's interesting here is, look, I said to you that if we do push and stay above the 98.85 zone, I will continue targeting the upside and possibly aiming for that 100 zone eventually. Yesterday, look at this. I said to you that if we do drop below the 98.25, I'm going to go for my 97.25 zone right here. Fantastic result. Tick. Great. Good target, good test. We also tested the 45-day EMA, so we even overcame it. So in a way, everything's kind of now pointing more towards the downside. However, at this point, look, I think I'm not going to rush into this in terms of getting comfortable with the downside right now. Yes, in normal world, I would say, hey, we dropped below the 97.25, which is my area here, which I chose. The 45-day EMA here as well. We're kind of balancing around it. If we stay below the 45-day EMA, then yes, potentially there is a good chance for this one to drift towards the 100-day EMA. But if we don't, if we somehow climb back above the 97.25 zone right here, that's actually telling me that maybe we're actually looking maybe at something like a double top pattern here. Look, as you can see already, I just kind of almost marked it, but probably maybe you didn't see it. This is the level that I'm also watching. This is quite actually this is something that we should need to consider. We should have to consider later on. So if you're very skeptical about the downside, wait for a drop below this hurdle. If that gets cleared, a forthcoming lower low will be confirmed. CHF-JPY. Also, again, beautiful decline. We were in this rising channel pattern. Yesterday we created a new high for this year, pushed further north, fantastic. And then I said to you that, look, if we break this upside line, I will go lower. My next target will be the 45-day EMA. Fantastic tick, great result. Look at this, just bang on. What's next? Again, the 45-day EMA. If we do drop below it, I'm gonna go further south. At this point, that's what I'm gonna do. Here, that's what I'm gonna how I'm gonna play the game. And to be honest, I'm gonna actually leave it for next week, because at this point, it's just way too tricky. I mean, today's day might be just the kind of the aftermath of with the US CPIs. You know what happened with the US CPIs. So it could be a little bit messy. It could be unlogical a little bit. So just that's why I leave it for next week, and it'll be better. CAD CHF. Okay, a rally, a bit of a jumping around moment here, but still the same game plan. For the upside, I need to see a push up of the 0.6633. For the downside, a drop, and the body of the daily candle staying below the 0.6556 area right here. That's what I need here. USDJPY. There we go. There we go. Look, it worked out. It worked out beautifully. I talked about this. I said that if we do drop below the 160 zone and we stay below it, I will go towards the downside, towards my 158.45 zone there, right there. Oh, excuse me. I have to start my voice again. My voice is going down, I think. So yeah, I said to you that if we do drop and stay below the 160, I will get a little bit more bearish, and my next target will be the 158.4.5, somewhere around here. Tick, and then yes, the upside scenario here. I mean, the upside line, not the upside scenario, but the upside line is the next one that I'm going to be watching. You know what I really want to do here, because I'm looking at this chart right now, and there's a lot of lines. But you know what? Now I'm going to leave this for now. I will update this chart next week. I'm going to remove all the lines. I'm going to allow today's day to go to see how we're going to getting along on Monday, because I'm not going to be here, and we will resume on Tuesday. So basically we'll have 2 days of trading for the chart to sort itself out, and then on Tuesday I will pick up on this again. I will probably start the chart again as clean and fresh. I will bring some lines back, of course, the previous ones, but mostly it will be a new fresh chart, because again, I think that this is already getting way too messy. It's working out, yes, in general it's working out, but I think it's getting a little bit messy, so that's why we need to relook at it. USD CHF, we dropped below this hurdle, this 0.8944 area, but we failed to stay. So we need to see the body of the daily candle staying below this area in order to go lower. That's kind of it, honestly. That's pretty much it. In terms of the upside, yes, a push above the 0.9050 area where for here right now here would be nice. US dollar against the Canadian dollar, and here the situation is that I'm still watching this 1.36 zone. If that gets cleared, I'm gonna go lower. GBP JPY, also very nice movement yesterday after we've hit the 208 zone, or just a little bit above that. We dropped back down. We fell below my 204.91 zone, but as I can see right now, it is not really carrying much significance. So I think that what's best here is to mark yesterday's low. That's the first thing. And let's put it this way: as long as we stay, this is what I'm going to do. As long as we stay below the 206.17 area, I will continue targeting the downside. If it pushes back above the 206.17 zone, then yes, I will consider a move higher towards the 208.22 zone again, or even above that. But for now, this is something that I'm watching here. I think that this is what I'm going to do right now. I'm going to grab this one and mark this area right there. If it holds, yes, I will continue. I will continue. I will consider a correction back down. That's what I'm going to do here. There we go. GBP NZD. So far, so good. We've cleared the downside line. We stayed above it. We're currently still staying above it. So in a way, there is a good chance for this one to drift further north. Hey, for now, I think that yeah, that's a good area to consider. I think for now, I'm just going to aim for that 2.12 and a half, something like that zone here, which is basically the highest point of April of 2024. I'm going to continue aiming for that one. If that gets cleared, wonderful. I will go further north here, and I will go towards the area right here. I mean, so yeah, in general, the upside scenario is quite attractive if we continue to trade above this downside line. GBP USD very quickly. So again, beautiful move to the upside. So far, so good. I mean, look, this is working out beautifully. In general, I think we should start considering the psychological 130 zone. I mean, that is quite attractive. Not here. Look, this is 1.31 for 40, but the 1.30 zone is around here somewhere, basically around here, near this, near the high of the 27th, I think, yep, 27th of July of 2023. So I think that the psychological 130 zone is on everybody's mind right now on GBP USD. Whoever's trading GBP USD, I think that could be a nice, good target to aim for. Let's jump into Euro GBP. So obviously, if the Euro is not the strongest one right now, GBP is doing quite okay. So obviously, we're seeing Euro GBP falling off the, not falling off the cliff, but sliding, further. We're near key support. I talked about this. I said that if we do break this upside line, my next target is the 0.84 zone. Fantastic, we reached my area. I mean, not exactly the 0.84, but it's never the exact level. It's always the area near that level. So now the question is, can this 0.84 surrender? If it can, well, guess what? Further declines are possible. EURUSD. EURUSD, again, beautiful drop. Look at this. Everything just worked out perfectly. Honestly, it's like a fairy tale. After we had a nice good run here towards that 175.59 zone, we started drifting back down. We fell below my 173.51. I didn't even have it from here. I had it from here. And my target was the 171.64. I mean, this is just spectacular movement in one day. I mean, wow. Talking about from the peak here to all the way down here, 2.3%, something like that. That's a decent move. I mean, that was quite an amount of pips here, So let me just, double check through about 400, almost 400 pips, almost 400 pips. I mean, that is just wow. Right. So, at the moment, what should we do with the EURUSD? I think that at this point, just keep on monitoring this 173.50 zone. If we continue to trade below that, another decline here could be possible. If we do drop below this hurdle right here, this 171.64, then okay, yes, more sellers here could join in. We could target this upside line. We could, of course, we could fall below the 45-day EMA. We could target this upside line. We could provide support. But let's go slowly on this one. Let's not rush into things. Keep your eyes on this little hurdle here, this 171.64. I think we can actually even mark it for our future reference. I think that could, carry some significance in the short run. Let's see. And finally, EURUSD, ladies and gentlemen. So yes, beautiful pop yesterday. I talked about this, and 1.0855 zone. I talked about this. There we go. Fantastic movement here. We didn't reach my 1.0916 zone, but that's okay. We reached the 1.09 area. I'm quite happy with that. That was a good result here, and hey. Beautiful. I think that we could still see some upside here, maybe even a retest of the 1.09 zone. Let's not rush into things, of course, but certainly I will continue considering that target if we continue to trade above the 1.0850. If we start falling back below it, maybe a bit of a retracement back down here towards the EMAs would be nice. So that's kind of it, ladies and gentlemen. Next week for the euro should be more exciting because we have the ECB's interest rate decision. So, ladies and gentlemen, if you want to leave it for next week, honestly, I will totally support you on that because again, don't try to squeeze the last things. Maybe it's just not going to do much exciting or logical things because there's not much data. The only data is the kind of the idea of lower inflation numbers in the US, and how the Fed will react to that, and what the market could think on that. Look, today we have the US PPIs, right? And today we have the US PPIs. This is something that the market will be keeping a close eye on. The Michigan consumer sentiment preliminary number, by the way, not the final preliminary. So the main number is the PPI, and this is something, of course, Euro USD traders will be looking out for, because again, there's a USD involved in there. So just be careful, be cautious, do not rush into things, and just take everything with a pinch of salt. Have your cool head on your shoulders, and everything will be fine. So, but on that note, ladies and gentlemen, thank you very much for for watching and listening. I really appreciate that. Thank you very much for tuning in this week. Look, this week was quite an interesting one. We had a nice session with me and Jens. I had a guest speaker on our channel here, and I think that that was a blast. And basically, if you want, you can check it out. Wait, there's a second. Let me just drag this one. It's sitting right here. Where is it? There we go. That's me. That's me and Jens here. So we talked about the markets. I think it was a good session. Check it out. We had some insights, and you can actually also have a look. Have a listen to his insights on what he thinks. And there's honestly a lot of logical stuff that he's saying. So yes, we're gonna have another session with him in 2 weeks. So hey, prepare yourselves for that. But more information will come. Don't forget to subscribe, to click on that little bell thing. And look, as always, stay safe. Have your stop losses in place. Risk only what you can afford to lose. Don't overtrade, and everything will be fine. And I'll see you on Tuesday, because just to let you know, there's not going to be a session on Monday. I'll see you on Tuesday. Thank you very much, and bye-bye.